Hi, my name is Max Ledger. I'm a student at West Texas A&M University, and today I'll be presenting a financial analyst report for two companies, D.R. Horton and Lennar. So right now, let's get into the macroeconomic environment that these two companies find themselves in. So right now, the major variables on the demand side are the record low mortgage rates that are driving consumers to buy new homes. We have a changing consumer demand following the COVID-19 pandemic. Consumers are actually looking to buy outside of busy urban centers and into suburbs, which is actually good for home builders. We have an increase in per capita disposable income, and this was due to the fact that there were increased savings rates following the lockdown of the pandemic. On the supply side variables, on the other hand, are not quite as good. We've had supply chain disruptions, so we've had a constrained supply which has been driving up prices for materials and labor, as well as increasing delays for projects. All right, let's go into our fundamental financial analysis. So D.R. Horton right now trades at $92.27 a share, $103.19 a share for Lennar. Required return for D.R. Horton, 10.55% versus 11.6% for Lennar. The expected return, higher than the required return in both cases, 20.85% for D.R. Horton and 15.39% for Lennar. These two stocks are in a cyclical industry, obviously, so they should have a beta of 1.15 for D.R. Horton versus a 1.3 for Lennar. If we look at the ratio analysis, we see that we're forecasting a trend that's showing an increase in earnings, an increase in profit margin. On the negative side, it seems the P ratio is trending downward, so it may be that investors are a little bit bothered by the prospect of rising interest rates or inflation. All right, industry analysis. So the major threats right now to the industry are the prospect of rising interest rates and inflation. Major opportunities would include capturing the Gen Z and millennial home buyer market. Market structure. So the U.S. home building industry could be characterized as both oligopolistic and monopolistic competition. Oligopolistic because we have a few major players that are highly concentrated, but at the same time we have low barriers of entry, which means increased competition. Let's get into our environmental and corporate governance. So after doing some research on both these companies, I have not seen that they've done much for the environment or gone above and beyond. In my opinion, that's a mistake. They should be taking a more of a leadership role, as the environment will be becoming increasingly important. If we look at insider trading, we see that a large number of shareholders have sold stock for D.R. Horton, which could be a concern. Institutional investors hold the stock at 83% for D.R. Horton versus 94.5% for Lennar. Most investors are holding right now. So my advice is, these are great stocks. My advice is to buy them if you don't have them, and if you do own them, hold them because they are a great stock. Thank you for your time.